Yeah, so yesterday we saw an ADP private sector number that was really strong, close to 500,000, and the markets freaked out. They thought that, oh my goodness, this could mean the non-farm payrolls is going to be really, really hot. Does the Federal Reserve need to hike even more than two times in the remainder portion of the year? And so we saw a sell-off yesterday, and today's jobs number came in just slightly under expectations, which kind of calmed those nerves. So I think that again gives the investor the green light to say, okay, the Fed may still hike a little bit more, but there's probably, if the jobs numbers are getting a little bit weaker, maybe there's not incentive or the want by the Federal Reserve to continue to hike much more past that. So I think it's like it essentially opens a light at the end of the tunnel.
The fortune of Bitcoin is no longer influenced by market mood in the US. The 90-day rolling correlation between changes in the spot price of Bitcoin and those in the broader S&P 500 index, the Nasdaq Tech-Heavy Equity Index, and Wall Street's Tech-Heavy Equity Index has decreased to around zero. Data monitored by crypto derivatives analytics company Blockskulls show it to be the lowest level in the last 2 years. Due to the declining correlation of traditional risk assets, crypto traders must only pay attention to traditional market mood and macroeconomic trends. One might be let down. Aside from the range-bound action in the US equity indices, Bitcoin has returned 25% since BlackRock's filing on June 15th. The markets are optimistic that the US Securities and Exchange Commission, or SEC, would alter its practice of turning down applications from some of the greatest financial services firms in the world. However, any euphoria on Thursday was surpassed by worries about economic growth, which is a sign of impending inflation. After an ADP data revealing that the private sector added 497,000 jobs, above many predictions, and breaking a similar declining trend, Ether also fell rapidly from its peak above 1950. The ISM Services Index increased to 53.9 in June, surpassing consensus forecasts of 51.2 and May's 50.3. Join Gareth Soloway as he discusses the market response to the ADP report, his analysis of Bitcoin, and his outlook for the stock market as we enter a new week.
And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand. And you're right. This is what we were talking about a month or so ago when we last talked, and we still have not been able to do it. So for me, I'm looking at this 30,000 low where we've been going sideways now for about 2 to 3 weeks, and the $31,000 high. And we're basically staying within this range, $1,000 range. And I'm looking to see which way does it break. If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000. If we can break above 31 and again, hold above 30,500 for 5 consecutive days, you should head to about 35,000 on Bitcoin. So the level goes all the way back here, right? So you have to go back all the way to the cycle, the bear market or the bull market cycle of 2021. And it's connecting as many pivot points to the daily closes as possible. And again, that's what the line kind of comes out to be. So right at that 30,500 on a closing basis for 5 days, 31,000 would be a good breakup again if we got to close above that. But yeah, it comes into just technicals and just finding these chart levels. And it's amazing how a lot of people talk smack about technical analysis, but again, we can see how this level just is a level. I mean, if no one's listening to me, maybe a few people are, but overall, this is big money kind of controlling this level here on a technical basis, and it shows right here. So when you go from the 20s to the 30s, there's going to be some sort of factor where people who held all the way down to 15,700, there are people now that are getting back to these cycle levels that were major on the last cycle that are saying, all right, I'm getting a little nervous here. They're more likely to sell. There's also other people that bought at 15,700, 16,000, and now they're up a full 100%. And we know that even numbers tend psychologically to make people say, okay, listen, I'm up 100%. I'm going to sell and take some profits. So there's multiple psychological factors going on here, technical levels, psychological, and it is amazing to watch how the market has struggled at this 30,000, 31,000 level. I think Bitcoin it's a little of both, right? So you have the AI narrative with stocks like NVIDIA and so many other companies. I mean, you could go back in a lot of the conference calls from last quarter and check how many times AI was mentioned, and there's a correlation to how high the stock has run based on how many times it was mentioned in the conference call. So there's a lot of things like that going on where you have the momentum driven. I do think there was a lot of money on the sidelines. Again, the light volume summer months are generally months that can be driven by the retail crowd. And so you're seeing a lot of money that was sitting on the sidelines come in. And I think on the other side, you have Bitcoin where, yes, we're starting to get some clarity for Bitcoin alone. We see Bitcoin dominance pushing up above that 50% level, and the BlackRock news, the Fidelity news on a spot ETF. So it's positive. It's just still kind of a question mark. So I think that's where you're struggling on Bitcoin at this point. By the way, I also think that you have to look at the M2 money supply. You have to look at how much liquidity is in the market. Liquidity keeps dropping off in the entire system, not just the stock market. Stock market is one thing. People are still willing to chase, but M2 supply has really fallen down here, and there's a correlation between M2 and what risk assets do. You're seeing this kind of opening, and I know Ben Cowan and I have discussed this quite a bit in the no-shill zone. You have this M2 and stock market diverging. And what that does, folks, is it tells you that at some point that mouth has to snap shut, whether it's M2 rising to meet the market or the market's falling to meet M2. We don't know any of the security classifications now that have to do with what the securities of crypto will be. And I think that's just keeping so much. I mean, I can't find any big funds or big institutional money or major money that's buying altcoins right now. I can find ones that are buying Bitcoin. So that's the difference maker right there. And I still think Bitcoin dominance based on the chart. It's interesting because he uses different metrics than I, but both our metrics show Bitcoin dominance going to about 58%. So there's the two scenarios are Bitcoin falls a little, the altcoins fall a lot, or Bitcoin rises a lot and alts rise less. And so either way, this just kind of continues to impress upon investors that probably the place to be if you're holding for the next 6 months is in Bitcoin, 6-12 months. If you're playing quick little trades, obviously alts can outperform, but for the midterm, it's probably Bitcoin is your best play in terms of return. This major kind of infusion or of fear from the SEC, right? So that's really what's going on here is like the SEC has now made it so that you don't know if an alt is worth 10% of what it is currently or if it's worth 10x of what it is right now. And so without clarity, it just keeps so much money on the sidelines. But I'll tell you one thing, and I've said this to so many people, that if we get clarity with the alts, like let's say they come out with rules for these altcoins that are securities and we can see clearly, then we can value them. And you might find that like a Polygon or a Cardano is maybe valued way too low right now. The other side of the coin is it could be the opposite too, and that's what we just don't know as investors. If you're looking for what that could be, it could be a approval of a Bitcoin ETF. It could be the stock market continues to rally and risk on continues here, in which case eventually you would assume risk on means Bitcoin heads up as well. So those would be the positives that investors should look for. The negatives, which I think there's more negatives out there, if you see the stock market topping out, let's say the stock market even has a 10% correction from this massive run we've been on over the last, since October of 2020, if that starts to panic investors, do we see exiting and a breakdown on Bitcoin? So for me, it's watching this range. Obviously, it's a very tight range, and whichever way it breaks, I would go in that direction in the short term.
Following BlackRock's filing for a spot Bitcoin exchange-traded fund ETF, Bitcoin has been driving a bullish run over the past week. The Wall Street colossus accelerated Bitcoin's surge to supremacy in the cryptocurrency market and encouraged investors to purchase the asset. Despite numerous previously rejected ETF applications, the price increase has also spread to other assets like the Grayscale's Bitcoin Trust, or GBTC. According to iCharts, the so-called GBTC discount, or the difference between the share price and the net asset value, NAV, of the Bitcoin it owns, has been declining and has recently reached a monthly low of 30%. During the 2021 crypto spring, according to Coinmetrics, an open-source data analytics platform for public blockchains, Bitcoin's market share progressively declined, tumbling to its lowest point in January 2022. It represented 37% of the total market capitalization of all cryptocurrencies at the moment. The survey also showed that Bitcoin's weight of 65% in the so-called CBMI 10 Coinmetrics index for the top 10 cryptocurrencies was at its highest level in 2 years. The metric does not, however, include stable coins like Tether, UST, or USC. According to data from CoinGecko, the value of Bitcoin has increased by 85% so far this year, with a current market cap of $29,264. With noteworthy outliers from Bitcoin Cash and Lido Finance, the asset outperformed the bulk of cryptocurrencies in 2023. John Bollinger, a renowned trader and technical analyst, used Twitter on Friday to draw attention to a remarkable Bitcoin pattern. Bollinger, who is famous for developing the Bollinger Bands, a tool used by traders to assess volatility and price levels, noticed a traditional pattern unfolding on the chart. Blast-off broke through the upper band, consolidated, found support at the intermediate band, and turned upward. According to Bollinger's tweet, Bitcoin, whose price is at $30,219, is now finding support at the middle band, historically indicating that a price increase may be on the horizon. Bollinger's pattern starts with a blast-off, an explosive price surge that causes a rip through the top band, when the price exceeds the upper Bollinger Band, suggesting a strong upward momentum. What do you think of Gareth Soloway's perspective? Please leave a comment below and make an effort to like, subscribe, and enable notifications. Thank you for watching.